Welcome to the deep dive. Today, we're stepping back from the day-to-day noise.
Right.
We want to take a really fundamental look at Bitcoin, not just as some fleeting trend, but, as a potentially foundational financial asset.
Mm-hmm. A serious contender, perhaps?
Exactly. You shared a really insightful article, Bitcoin versus gold cycles, fundamentals, and technical analysis.
Yes, I thought it laid things out quite clearly.
It did. And our goal here is to really unpack the core arguments for Bitcoin's, let's say, long-term significance.
So digging into the why behind it all.
Precisely. We'll look at its fundamentals, its intrinsic qualities, maybe touch on technical analysis, market cycles, really get into its unique attributes.
Sounds good.
By the end, we hope everyone listening can kind of grasp why some people are seriously calling Bitcoin the new, well, digital gold.
It's a big claim.
It is. And to kick things off, think about this little historical twist. Back in medieval China, they decided to base their currency on silver
Okay.
because, well, they had a lot of it locally. Meanwhile, most of the world was on a gold standard.
Right. Gold was the global standard.
And that choice, relying on silver, it actually had some pretty significant long-term consequences for them on the world stage. We'll draw a parallel to that later.
Interesting. Yeah, that's a good teaser. And to start, it's probably vital we establish how we even evaluate something like Bitcoin.
Good point. Where do you begin?
Well, the article rightly points out two sort of main pillars: fundamental analysis and technical analysis.
Okay.
Fundamental analysis is basically about figuring out what makes something worth buying. You look at its inherent qualities like scarcity, how decentralized it is, its actual utility.
Its core features, essentially.
Exactly. Like, think about self-custody with Bitcoin. You hold the keys, you're in control. That's fundamentally different from a bank holding your money.
Hey, totally different. It puts the responsibility on you.
For better or worse, yes. And that control is a key part of Bitcoin's potential as, truly sovereign money.
Okay, so fundamental is with the intrinsic value. Then technical analysis is the when.
You got it. Technical analysis focuses on when might be a good time to buy or sell. It's looking at charts, patterns, market trends, trying to gauge timing.
Market sentiment, maybe.
That plays into it, yeah. And the article stresses, even if something's fundamentally sound, buying it at the absolute peak, say, can still lead to losses.
So you need both, the what and the when.
Ideally, yes. They should sort of inform each other for, well, potentially smarter investing. It's about alignment.
Makes sense. A great idea launched at the wrong time might just fizzle out. So how does this apply to the Bitcoin versus gold debate? And back to that China story.
Okay, yeah, let's connect those. So medieval China picks silver because it's abundant locally. Rest of the world uses gold.
Right.
Over time, silver loses purchasing power relative to gold. This weakens China's currency in global trade. A local choice, but with huge international ripple effects.
So choosing the wrong base asset had long-term consequences.
Precisely. Now, fast forward to today. The article notes modern China is hoarding physical gold again, big time.
Interesting.
But globally, we see this huge shift towards digital assets, with Bitcoin leading the charge.
Okay, I see where this is going.
The argument is, this could be history repeating itself, but in a digital context. Is Bitcoin the new gold? While some focus on the old silver, metaphorically speaking.
Wow, that's quite the parallel.
And the article puts it bluntly, gold may be better than nothing, but it won't keep up with Bitcoin's appreciation curve.
That's a bold statement, because gold has been the go-to safe haven for centuries, right? During uncertainty.
It absolutely has, no question. The counter-argument, though, rests on Bitcoin's fundamental strengths in our digital age.
Strengths that gold, being physical, just doesn't have.
Kind of. The article suggests that gold's physical limitations, storage, transfer, verification in a fast-paced digital world might hold it back compared to a natively digital asset like Bitcoin.
Okay, that sets the stage nicely. Let's really dive into those fundamental qualities then. What makes Bitcoin potentially different?
Absolutely. Let's start with decentralization. This is core. Bitcoin has no central authority. No Fed, no central bank, no single company in charge.
Unlike our traditional money systems.
Exactly. Or even gold, which often ends up stored in central vaults. Bitcoin runs on a distributed network, thousands of computers worldwide.
So no single point of control. What's the real benefit there for the average person?
Well, the big one is reduced risk of censorship or manipulation. No one entity can just freeze your funds or change the rules on a whim.
Okay, contrast that with gold.
Sure, you can hold some physical gold yourself, but large amounts. They're usually held by governments, by institutions, and historically, well, governments have confiscated gold. Happened in the US even.
Right, Executive Order 6102.
Precisely. Bitcoin, on the other hand, offers the possibility of true self-custody.
Self-custody, that term comes up a lot. What does that practically mean, holding your own keys?
Exactly. It means you control your Bitcoin directly. You can use software wallets apps on your phone or computer, or more securely, hardware wallets.
Hardware wallets are those little USB-like devices.
Yeah, basically. They keep your private keys, the secret codes, to access your Bitcoin completely offline.
Ah, so even if your computer gets hacked.
They can't get your keys and steal your Bitcoin. The transaction has to be confirmed on the device itself. Software wallets, being online, are more vulnerable.
Got it. That's a pretty significant security difference. Okay, so decentralization means more control, less single-point risk. What's next? Scarcity.
Scarcity, absolutely crucial. Bitcoin has a hard cap, 21 million coins, period.
That's written into the code, right?
Baked right in. And what's even more interesting, because people lose keys, forget passwords, the actual effective supply is likely much lower, maybe 17 million, maybe less. Nobody knows for sure.
So it's actually deflationary over time, potentially.
By its very design, yes, especially compared to fiat currencies where central banks can and do just print more money. Think quantitative easing.
Which devalues the existing currency.
Correct. Now compare Bitcoin's scarcity to gold's.
Gold is scarce, obviously. It's hard to find.
It is, but it's relative scarcity. We can always theoretically find more gold, mine deeper, mine asteroids. Maybe even synthesize it someday, who knows?
Right, there's no hard limit known.
Exactly. Bitcoin has absolute scarcity. That 21 million cap is fixed. The article uses a great analogy, the Mona Lisa.
Okay.
It's unique, irreplaceable. You can't just make another one. Gold, while valuable, exists in many places. You can always mine more copies, in a sense.
Ah, I like that. Bitcoin is the Mona Lisa. Gold is, well, gold, verifiably finite versus potentially more discoverable.
Precisely. And this absolute verifiable digital scarcity is a huge part of the argument for it being a store of value, maybe even superior to gold in the digital age.
Okay, decentralization, absolute scarcity. What about the tech itself? Security.
That's the third pillar. Security. It's built on cryptographic blockchain technology. Very complex stuff.
The blockchain. Buzzword central.
Yeah. But the key security feature is the consensus mechanism, typically proof of work for Bitcoin.
Proof of work. Explain that simply.
Okay, think of it like a massive ongoing competition. Computers, called miners, race to solve a really complex mathematical puzzle.
Okay.
The first one to solve it gets to validate the latest block of transactions and add it to the chain. And crucially, solving this puzzle requires immense computing power, which uses a lot of energy.
So it's expensive to participate.
Extremely expensive, and that cost is what makes the network secure. It would cost an astronomical amount for someone to try and cheat the system or rewrite the transaction history. It's economically infeasible for the most part.
So the energy use is actually a security feature, not just a byproduct.
Exactly. Plus, the Bitcoin code itself is open source. It's constantly scrutinized, tested, and updated by incredibly smart developers worldwide.
So many eyes are on it.
Thousands. And the fact that it's withstood years of attacks and attempts to break it actually strengthens its credibility. It proves its resilience.
The longer it survives, the more trust it builds.
Hmm.
Okay, let's shift gears a bit. What about adoption? Where are we on that curve?
Still very early days, according to the article. It estimates maybe only around 10% of the world's population has any exposure to Bitcoin.
Only 10%.
Yeah. So the argument is there's massive potential for growth. As adoption increases, driven by maybe easier interfaces, institutional investment, or these layer 2 solutions.
Layer 2, like the Lightning Network.
Exactly. Things like Lightning aim to make Bitcoin transactions faster and cheaper, potentially usable for everyday things like buying coffee without waiting 10 minutes for confirmation.
So making it more practical for small daily use.
Right. If these solutions take off and adoption grows, the basic supply and demand suggests significant potential price appreciation.
So still early innings, like the internet in the 90s.
That's the comparison the article makes, yeah. Think how much the world changed once internet adoption hit critical mass. Bitcoin could be on a similar path.
Okay, we've covered some strong fundamental arguments. How does this translate into, like, real-world strategy or thinking about assets?
Well, one interesting point the article raises is using Bitcoin itself as a base asset, even if you're trading, say, stocks like the S&P 500.
How does that work?
Instead of measuring your wealth or trading gains in dollars or euros, you measure it in Bitcoin. The goal becomes accumulating more Bitcoin, regardless of its dollar price at any given moment.
So you're thinking in Satoshi terms, not just fiat.
Precisely. It forces you to ask, what am I really trying to accumulate? What's my unit of account? Is it the dollar, which we know inflates, or is it this scarce digital asset?
That's a fundamental shift in perspective, asking what you denominate your wealth in.
It really is. And it ties back to that idea of Bitcoin as potential digital gold, a
Right.
base layer asset. The article also mentions market cycles, the booms and busts.
Which Bitcoin is famous for.
Infamous, maybe. While we aren't diving deep into technical analysis today, understanding these cycles is another piece of the puzzle for investors. And the fundamentals we've discussed, adoption, tech upgrades, scarcity, they definitely influence these cycles.
Okay, this has been a lot to unpack. The article summarized the Bitcoin versus gold differences in a table, right?
Mm-hmm.
Maybe we can quickly run through those main points again.
Good idea. Let's recap. Decentralization. Bitcoin is fully decentralized. Gold often relies on centralized vaults for storage and verification, especially large amounts.
Okay.
Scarcity. Bitcoin has that absolute fixed 21 million cap. Gold has relative scarcity. More can potentially be found.
Got it.
Self-custody. Big advantage for Bitcoin. You can truly hold your own keys, much harder with, say, a ton of gold bars.
Right, practicality.
Security. Bitcoin relies on its robust cryptography and proof of work. Gold is physical, needs physical security, vulnerable to theft.
Makes sense.
And finally, programmability. Bitcoin is software. This allows for things like layer 2, smart contracts eventually, perhaps,
Yeah.
innovation. Gold is, well, it's an element, not programmable.
That's a very clear summary of the key differences.
Yeah, it helps frame the argument. It's not about saying one is bad and one is good, necessarily.
More about understanding their distinct properties in today's world.
Exactly. And the article's conclusion is basically that Bitcoin isn't just speculation, it's potentially a new type of money with unique advantages that old world assets just don't have.
Its tech foundation, being the first mover in digital scarcity, the network security, that predictable supply.
All contribute to that argument, yes.
So for everyone listening, maybe the big takeaway is to think about Bitcoin not just as price go up, down, but potentially as a base unit of wealth.
And if you do hold some, prioritize securing it properly. Self-custody, maybe using a hardware wallet, that seems to be a core message.
Right, that control aspect again.
Indeed.
Okay, so as we wrap up this deep dive, here's a final thought to chew on. We've talked digital scarcity Bitcoin versus physical scarcity gold.
Mm-hmm.
What if we're moving towards a future where digital scarcity becomes just as important, maybe even more important, than physical scarcity in defining value?
A world where verifiable bits are valued as much as or more than tangible atoms.
Exactly. How could that kind of fundamental shift impact your own financial future? Even if you hold 0 Bitcoin right now. Something to ponder.
Definitely food for thought.
Thanks for joining us on The Deep Dive.
Welcome. You are going to watch an interview I did with somebody who's interested in the markets. We talked about some fundamentals and some technicals. I talked about market cycles, about sentiment, about structure, and I also showed a lot of indicators that are useful. Now, if you want one of those indicators, please contact QuickLearn. They will get you in touch with me, and I will tell you how to get that indicator. There's a price tag of 100 USD for any of those indicators. So if you want one, you can reach out to me. You get them with my parameters. And I also tell you how to set them up on TradingView. You can get for free on TradingView up to 2 indicators. If you want more than that, then you will have to take a plan, a subscription with TradingView. You can have 2 indicators per tab, and you can have more than 1 tab open. So it's possible that you can manage with the free plan. So that is for the indicators. In that case, you have to contact QuickLearn. The email address is in the description. And if you want me as a financial advisor, just to talk about the market or to get a strategy you can follow or to make some decision in the market at the right moment where you have a higher probability of making money than losing money. If you need help for investing or trading, you can reach out. Just write in the email why you're contacting. For example, say, I'm interested in purchasing an indicator, or say, I would like to discuss the market with a financial advisor, or say, I would like to pick you as a financial advisor, and get in touch. So QuickLearn will get you in touch with me and you get an answer. Of course, on those personalized services, there is a price tag. But for an indicator, it's only 100 USD. And if you want a consultation or to have me as a financial advisor, it's a fee once a year, but it's not extremely high, so you can afford it. It's better spending some money and working with somebody who knows something about the market than doing only decision based on emotions. Most people take decision based on emotion, and the market will decimate them because 98% of traders lose money. So if you don't want to be part of the herd who always takes bad decision at the worst moment possible, then it's a very smart idea to talk with financial advisor. Now, the video I give you is free, but I won't be able to do those kind of videos all the time because I have nobody who's willing to do an interview. And even with, you should always talk with financial advisors just to make sure that your decision makes sense and that you're not doing something stupid. So anyways, enjoy the interview. It's around 2 hours long. And we talk about fundamentals, Bitcoin, comparing Bitcoin to other assets, and technicals. It's very interesting, and I hope you enjoy. Thank you, and don't forget to like and subscribe. See you. Are you ready to take a look at the charts?
Yes, I also have my notepad on the site for any notes I might take.
Okay, well, there's a couple of ways of doing it. So I want to do some fundamental analysis with you. I want to talk about technicals, and I want to take a look at cycles today with you in the market. So I think the best is if we start with a general discussion where I don't have to show you any charts, but you just can read what I will put Google Meet. You can just read that and I will comment on it. So it's a text I generated with ChatGPT. It's common knowledge and I will just comment with it on it and change a couple of things about it. It will sound a little like if I'm a Bitcoin maximalist, but that's not my purpose. I'm just doing it because fundamental analysis is what you should buy, and technical analysis is when you should buy it. Okay? And both, you have to get both correct. If you get one of them wrong, it will hurt you. If you buy at the wrong moment, it won't be any good for you. And if you buy the wrong thing, that won't help you either. Are you still there?
Yes, taking notes, listening, all good.
Okay, great. Just give me a second. I'm looking for what I want to copy paste. It's loading, so just take me a second.
Can you give me a quick description of fundamental and technical analysis?
I just tried to do that.
Okay.
I can again. Just give me a second to find what I'm looking. Yeah, Bitcoin key qualities. So I will copy that and then I'll share it with you. So how do I do that since I have never done it? I think I have to press this and now I have to put send. I don't know. Oh, it's very annoying. I cannot copy everything.
All right, try this one. I really like this site.
Because there's a limit.
Link. Yeah.
There's a limit on characters I can copy.
Go to that site I sent in the meeting chat.
Yeah, here I have everything. Okay. So now what do? I have to share the page. Yeah, just a second, please. Where is what I'm looking for? I think it's this. Okay.
It works.
Yeah.
I think we have to minimize the meeting and then just open the document.
You just want me to click on the document?
Yes. Do you prefer dark mode? Yes.
Okay.
All right. We're ready.
So I'll let you talk about the first quality and I will quickly comment on it. Well, the fundamental, look, I'll give you an example in history. So China in the past, they decided to back their currency in the Middle Ages. They decided to back the currencies with silver because they had a lot of silver. So they thought they had silver mines, everything. So they thought it makes much more sense to back our currency with silver. Unfortunately, the rest of the world went for gold and they kept losing purchasing power again and again and again because silver didn't keep up with gold. And it was a very bad decision. And now what is ironic is that China has new laws and they are hoarding gold. So this time they are holding gold. They want to back the currency again. And this time they are holding gold. The rest of the world is going for digital asset like Bitcoin. And in my opinion, they're doing the same mistake as with silver. Gold is better than nothing, of course, but it won't keep up with Bitcoin. The appreciation in Bitcoin will be just much, much more than it could ever be on gold. and they will end up again in the same boat than last time. They will keep losing and losing and losing against. So if you buy something that is worthless, then every technical analyst has no point. We have to talk about stuff that makes sense when we talk about investing. And right now I'm talking more about investing than trading, of course. But it's the same underlying thing, just a time frame that changes. Investing is on a longer time frame and trading is on a shorter time frame. But it's the same thing. But you should have exposure to, you have to decide what asset you want as exposure for your wealth. And that's something you can do even if you trade, because you can choose the underlying asset you use to trade. For example, I can choose Bitcoin as the underlying asset and trade the S&P. When I make money, I'll get some more Bitcoin. And when I lose money, I lose some Bitcoin. But even if I'm trading a completely different asset, it's just a collateral that I can choose for Bitcoin. I can also choose the USD or Euro, etc. But you have to think where you put your money and what you use as your base currency. So I'll let you read us the first quality of Bitcoin, and then I will comment on it.
Centralization operates on a decentralized network, meaning there is no central authority, like a government or bank, controlling it. This reduces the risk of manipulation or interference from central entities.
Yeah, it makes me think about the Fed and their manipulations of the market, injecting liquidity and then sucking out of the market, and that contributes to cycles of boom and bust. And decentralization is the most important quality probably on Bitcoin, because it allows a lot of things. And if something isn't decentralized, well, then you cannot be sure that there won't be any censorship on what you hold. And the only asset who really managed to be decentralized to a high degree is Bitcoin. No other cryptocurrency comes close to the decentralization of Bitcoin. So it's a very, very unique quality, and you find it nowhere else. And I'm not sure that we can ever do it again, because Bitcoin started out of nowhere and they started mining it on CPUs, on computers, and it grew slowly in the dark, and Satoshi Nakamoto disappeared. So there's a lot of things that made it very decentralized, and nothing else comes close to it. It's also one of the only network who is still using proof of work, and that it works really, and it has the first mover advantage. So there's very little chance that anyone will ever take its place, because if you want to take its place, what you do must be 10 times better. But one of the qualities you will see that will come up is programmability. And since you can program Bitcoin, even if the other stuff, if another crypto does something great, well, that's nice, but we will just implant it on Bitcoin, you know? So, and people don't like to switch from one boat to another. So there's very little risk that Bitcoin gets decentralized once it has the first mover advantage and everybody wants to put his money in Bitcoin and not anything else. Any question on that, or can we go to the next? I don't want to spend too much time on fundamentals, but if you have a question, I will try to answer it.
I have a quick question. Could you say also that gold shares this quality of being a decentralized asset?
No, I would not. The only decentralization that you find in gold is that it has different miners who have different gold mines. But if you cannot do self-custody, you will trust central authority, and that central authority will hoard your gold, and it is extremely easy to confiscate. In the past, gold was confiscated in the United States of America. So I wouldn't call it decentralized.
All right. Yes, it's easier because Bitcoins you can just hold on any memory card, right? So it's much easier to, contain it or hold it. It's tough to hold gold if you have a lot of that, right? You would need big warehouses and a lot of infrastructure around it. Okay, good point.
Exactly. It's called self-custody. There's two ways to do self-custody in Bitcoin. You can have an app on your computer or on your phone, and do it with that. I would call that a soft wallet, and maybe they use another word for it. But that's fine for as long as you don't have too much exposure, because there's still a little risk of getting hacked. Sometimes they manage to hack that if they get control of your device, of your phone, or of your PC. So in order to reduce that risk, instead of a soft wallet, when you have more, you use a hardware wallet. And that's a separate entity that stores your private keys, and you have to use it to validate any transaction. So even if they take control of your smartphone or of your PC, they would not be capable of doing any transaction and any unauthorized transaction. You must know that every transaction is final. So if the slightest mistakes becomes like address swapping, sometimes you type the address, but in the last second, when you press send, the address is exchanged to another address. There's malware that does that. And then you send, instead of sending to the guy you want to send the money, you send it to somebody else. And yeah, then it's final. There's nothing you can do. But then your computer or your phone did get hacked, and you have exposure to malware. And all those risks disappear if you use a hardware wallet. So I would say once you have more than 100 or 500, depending on your risk tolerance, you should switch to hardware wallet to just be sure that nothing can happen and that no hacker can take control of your asset.
Okay.
Let's go to point 2.
There is a fixed supply of 21 million bitcoins, which makes it a deflationary asset. This scarcity can increase its value over time as demand grows while supply remains capped.
Yeah. Do you have any remark? Because I do. So if you have any, I'll listen to them first, and if not, I'll start commenting on it.
Yeah, the only thing that comes to mind is I've heard it's actually only around 17 million or even less that's in circulation. Others are like lost accounts or just that have gotten lost over time.
That's correct. And would you say that makes it less valuable or more valuable?
That it cannot be, like if we think of fiat currency, where the central banks can print the new money, and then all the money that's already out there loses its value, right? So I think it's a good quality, yes.
So the answer is it makes it more valuable. But that was the general 21 million Bitcoin. You answered that question. My question was, if instead of we having 21 million, we actually only have 17 million, does that make that more, the Bitcoins more valuable or less valuable?
Yes, it makes it even more scarce.
Exactly. And I would add something on top of it. I would talk about absolute scarcity, and everything else, I would call it relative scarcity. Like gold or real estate is also scarce because there's also only a certain amount that goes around. But you can always mine for some more. You can always find more mines. You can always to other planets or on asteroids. There's a lot of gold around. And also it is possible that one day you will be able to make synthetic gold that you cannot distinguish from real gold. So there are a lot of risk. It is just relative scarcity. And when the price of gold goes up, well, then new miners start mining gold. So then the supply of gold increases, you know? So gold, it's not the same kind of scarcity. The one is absolute scarcity.
Okay.
Then let's go to the third point.
Okay, before that, I have a very quick comment. Do you know how many users there are right now, roughly? Is it something like 100 million people using it, or what do you think the estimation could be?
To give you a precise answer, I would have to ask ChatGPT. But we are still at the beginning stages. So I would think it is around 10% of the population who has some exposure to Bitcoin. That means that there's still 80 or 19% of people who should enter the boat.
All right.
And my question to you is, if those people start using Bitcoin on the main blockchain on level 2, like the Lightning Network for transaction like by paying coffee or anything else, do you think that all those people joining the network will increase the price? Or do you think that's indifferent to the price, or that the price would decrease if all those people join the network?
I think it would increase
Exactly.
by a lot.
Yeah. Me too. Now, we talked about scarcity, and now we have to talk about security. I'll let you go.
Security. Bitcoin uses advanced techniques to ensure the security and integrity of transactions. The underlying blockchain technology is highly secure and resistant to attacks.
Yeah, so I'm not the greatest expert, so I cannot read code, but you have to know that the smartest minds are working on Bitcoin. And if you manage, for example, to change the code of Bitcoin to enter something, to improve something or something else, that is huge on your credentials. So that is very in the blockchain world, in the digital asset sphere. So if you can do that, you are highly respected. If you can touch something in the code, it doesn't happen often that we change the code because we don't want it to be spaghetti code and too much things in or out. But the brightest mind work on it, and you can always improve it, change it, make it quantum resistant, and so on. So there's very, very low chance that you have a real risk. There was one thing that happened. They started to make pictures on Bitcoin and so on. So NFTs. And that actually they didn't want to. They just exploded an update that was made. And that wasn't great because at the beginning, too much people were playing around with pictures and transaction fees went up. But now the transaction fees are back to normal and everything is running smooth. So, and even if the transaction fees one day become too high, that's still not the end of Bitcoin. You will just make less transaction on the main blockchain on the first level, and you will use the Lightning Network and so on. They can create as much second levels as they want on it. So yeah, I'm confident that it's much more secure than anything else you have. So is the security 100% and is it total perfect? No, nothing of those things. Decentralization, well, scarcity is extreme, but decentralization you can criticize. You can criticize also security, but there's nothing more decentralized and there's nothing more secured available. So I think at the moment since you have to use something and store your money in, in this case you should take the best asset, and even if it's not 100% perfect. I mean, if it's 99.99% perfect, and that should be enough, especially when you compare it to other stuff that is less than 30% perfect, and sometimes only 10 or 5% perfect. So there's a huge difference, and it's much better than the rest. So I'm sure that security-wise, the guys who work on Bitcoin will do what they have to do to make it run. And even if you can make small mistakes like the update they make, I think it was Taproot, if I'm not mistaken, and that update could be exploited to put pictures on Bitcoin, and they didn't want that actually, because they didn't want to include more transaction or more stuff on the blockchain. But it still worked out, everything still worked out fine, because you have to pay for those pictures, and that gets very costly, and people will stop doing it because it's just too much money, it's not worth it. And if they really, really like a picture or a text on the blockchain, and they pay for it, well, everybody can use it. Then they can do that,
All right.
Transparency. Let's go to transparency.
Transactions are recorded on a public ledger, the blockchain, which ensures full transparency. While transaction details are visible, the identities behind the transactions remain anonymous.
Yes. So my first comment is that today it is pseudonymous. So it's not total anonymity, because there are people who track a lot of transactions and they check your identity when you enter, when you exit. So they know and they connect the dots, who sends to who or who buys what. And they finish by finding out that you did that transaction. But we are working on anonymity, and that's one of the thing they work the most on right now, and they consider the most important. And it's possible that Bitcoin in the future will be totally anonymous. And the governments won't like it at all. But the day you can update, well, then you update. And banning something that is decentralized is nearly impossible. You can ban it. You can say you shouldn't use it or so on. But the thing is, when you only talk about code, even if the internet doesn't exist, you can still make some transaction through SMS and so on. So it will be very hard to really ban it. I think China tried two or three, or maybe even 4 times, and they always failed on banning Bitcoin. So I don't think you can ban it, and we might get total anonymity in the future. Total anonymity would be better for us, because if everybody can know how much you have, that's dangerous for you. Because if you have a lot, well, then you get a target. You have a big target over your head, and people who want to do you harm, well, then they're enticed to do it. So total anonymity would be better. But already today, I mean, not everybody uses those very advanced tracking blockchain analytics, and it's still fine. And there were mixers around. So in the past, you could mix your Bitcoin and make them anonymous. I don't know if they all still work or if the government stopped a lot of them. Sometimes they do, and then they come back on their decision and let it go again. I think Trump went back on his decision, and now we can use some mixers again. But I'm not sure about the details about that. But yeah, well, also transparency was good in the start. You also must be able to check that you own the Bitcoin and that you can do the transaction. So for security reason, transparency was important in the past. But I think in the future we will go to more anonymity, which will be an improvement for us. The state won't like it, but for the user, it will be an improvement. Let's go to liquidity.
It's widely traded and can be easily converted to fiat currency or other asset through exchanges, making it highly liquid.
Yeah, so I would say liquidity is also how much money is in. And the more money is in, the more you have an order block. So there's the price, and there are sellers and buyers, but one of them is below. So if I'm thinking it through correctly, because I don't have an order block under my eyes right now, but if I think it through correctly, yeah, the seller wants a higher price. So I think the price, the offer of the seller is always over the exact price. Now it's 84,440. So there will be somebody who will sell Bitcoin for 44,450. So a little more. Instead 40, a little more. Yeah. And actually it's very close to the price. It's not, the jump is not that high. But there will be somebody who will tell you, if you want to buy, I'll sell it to you for that price. And he always asks a little more than the current price of the market. But the spread is very small. And that's for the seller. And the buyer, well, they're always buyers, but they always want a price a little below. So all the buyers put the price in a little below the market. And that makes a lot of liquidity. That allows you to enter and exit quite large amounts of money without being penalized. Because if there's no liquidity and the asset might be worth 300, but suddenly you sell, let's say 500, and once you press on sell for your 500 of that asset, it tanks the asset. The asset goes down from 300, it goes down to 50, And the difference in the price, well, that's the difference that's what you just lost. But in Bitcoin, there's so much liquidity in it that you can always enter and exit. And that's very important, because you don't want something like real estate where you need 6 months or 2 years or 5 years to find a buyer. You want to be able to exit whenever you want to exit.
Okay, makes sense.
Portability.
Bitcoin is digital and can be transferred across the world in minutes with minimal fees. It is not bound by physical locations or borders, making it highly portable.
Yeah, so that's the thing. I mean, if you can memorize 12 words, then you always have access to your Bitcoin. There are seeds of 24 words and seeds of 12 words. If you are capable of memorizing 12 words, well, then you can go anywhere and you have it in your brain. And if not, well, you have to find a solution to store that seed somewhere. So there are ways of doing that. You can look them up, and you just have to choose the one that is convenient for you. But yeah, it's total portability. It has no weight. It doesn't take any space, And if you can learn by heart 12 words, well, then you always have it in your brain. But I wouldn't recommend that because there's a chance that you forget and then you have no more access to your funds. So I wouldn't recommend that. But it's just to say it's very, very hard to ban from people knowing 12 words or writing down 12 words somewhere or storing 12 words. How do you want to enforce a ban against that? I don't think it's possible. And that's total portability.
All right.
Let's go. Yeah, I'm listening.
Yeah. The visibility coin can be divided into smaller units, the smallest being a Satoshi, which is 100 millionth of allowing for microtransactions and making it more versatile for various uses.
Yeah, great. So this is just important because if the price keeps rising and rising and rising, you must be able to divide it in small enough units so that everybody can still use it for microtransaction. And now this is not an issue at all. But in the futures, in 500 years in 500 years, maybe Bitcoin is so high that even that 100 millions of a Bitcoin might not be enough in 500 years because the price of Bitcoin is just too high. And that might be, 100 USD and the equivalent of 100 USD. And it might be too much because people want to do maybe some transactions smaller than that. But you still don't have to be scared at all because you can keep on dividing it to infinity with second layer. So you can be sure that the divisibility will be enough in the future.
All right. Store of value. Many consider Bitcoin a hedge against inflation and economic instability, likening it to digital gold. Its fixed supply and decentralized nature make it resistant to devaluation from central banks or governments.
Yeah, and that's a huge thing. I mean, that was probably why Satoshi Nakamoto invented Bitcoin, because at that time it was in 2008, and there was the crash of 2008 with the, if I'm not mistaken, with the
Market.
Yeah, the stock market, but it was about real estate and they had a word for it. It was, they lended too much money to people who were actually insolvent, who couldn't pay it back. And it was called, there was a word for that. And it was, I have a blank in my head, so it will come back. But and they rescued the banks. They injected a lot of money. And that was the moment Satoshi Nakamoto chose to release Bitcoin. So he was against it. And I think also the first block had a newspaper where it says the Fed is printing money, or the Fed is injecting more money into the inflation or something like this. But he was really against devaluing the savings of everybody and stealing money from everybody. So he didn't like that at all. And it's a huge thing he managed, because nobody managed to pull that off until now. To make sure that it cannot be devalued from central banks. Nobody was capable of doing that until now. So it's a huge achievement from him.
All right. Censorship resistance. Bitcoin transactions cannot easily be blocked or reversed by governments or other central authorities, providing a level of financial freedom that is harder to achieve with traditional currencies.
Well, ChatGPT was a little nice. He said harder to achieve with traditional currencies. It is impossible to achieve with traditional currencies. They all can be censored very easily. You have seen it again and again and again. I mean, and the thing is, when people lose trust in a system, if the assets are seized on will, like for example, the Russians who had assets on the SWIFT network, and they were all seized. And also in Canada, when there were les camionneurs, how do you say it in English? The guys with the trucks, the truckers who were protesting against the truck drivers who were protesting against Trudeau and his government and his decisions. Well, when the Canadians started sending the money, they just set the assets, blocked the transaction, and put the people who did it in jail, So that's just something you cannot do with Bitcoin. You will be able to find a way to do it totally with anonymity, And if you do a transaction, well, the government cannot stop the transaction or reverse it or undo it. So it's very, very important that it's censorship resistant. And it would be impossible if Bitcoin wouldn't be to that degree decentralized. Decentralization, you cannot get resistant money.
All right. Borderless. Bitcoin can be used anywhere in the world without requiring a centralized intermediary, making it a global currency. This feature is especially valuable in regions with weak banking infrastructure.
Yeah, for a lot of people, it's very hard to have a bank account. For a lot of people, it's very hard to have identity papers that are valid. I knew somebody who was that poor. Identity papers, he showed them to me. They stopped being valid 10 or 20 or 30 years ago. And he had never the money to renew it. Now, that guy was unbanked. There's no chance he can go somewhere and get a bank account, A lot of people they cannot integrate the system and participate in it because of it. But Bitcoin, there's no requirement. Everybody can open a wallet and everybody can have some money transferred into it, So that's a huge thing. And it gives a chance to people who otherwise wouldn't be able to transact. And that's an important thing.
Programmability. With Bitcoin scripting capabilities, it is possible to create complex smart contracts and financial products through Ethereum, though Ethereum is often the platform for more advanced programmability.
Yeah, so we don't like to try too much stuff on Bitcoin because we're scared that it will mess it up and it won't be favorable on the long run. So we want to get the main thing right, which is money. So we don't want to play around too much with smart contracts. But if something that Ethereum does is very useful and we can integrate it without harming the blockchain, we will. So smart contracts to a certain extent will also exist on Bitcoin in the future. It already started with the NFTs and so on. There's just programmability on Bitcoin. And you can do a lot with it. And people are extremely smart. They find a way to do even stuff they're not supposed to do with it. So, it was quite hard a long time. And in the past, when people were hesitant about Bitcoin and putting money into Bitcoin and didn't like, for example, that it use energy because they didn't really understand that it isn't bad for the environment when Bitcoin uses energy. They didn't get that. I had to explain that to them, but then still they're hesitant because it is used as a propaganda against Bitcoin. In the past, I recommended Ethereum. I said, okay, if really proof of work is with ASICs is something you cannot get your head around, then go for Ethereum. That's what I said in the past. But fortunately, none of my did it, and they all went with Bitcoin, and they all made the right decision, even if they didn't like proof of work. They all made the right decision. Because in this last cycle, Bitcoin's gains are just much higher than Ethereum. Ethereum is falling behind. So the market is opting out now. It still exists and it has still some use cases and switching to Bitcoin. So it would have been a bad investment. It's the same thing like with gold and silver. It is not a good idea to have the asset that is always losing value against Bitcoin and it's not keeping up with it. China did that mistake and it was very costly to them. And unfortunately, it looks like if they do it again now with gold instead of Bitcoin, because America and other countries like El Salvador, they are opting into the Bitcoin network. So if China does the mistake again, it will lose again value. It doesn't matter so much on the short term, but on the long run, 50 years or 100 years and so on, it will have a huge impact on them. So it's not a smart move. Now you have to get your fundamentals right. If you do that, if you do a mistake on them, well, then even technicals will be hard to save you. It can still do a lot, but I think you should get your fundamentals right.
What would you say is stronger for you, fundamental or technical analysis?
I think the most important is fundamental analysis. You have to start with that. It's like if you want to be capable of writing a book, you have to start with the basics, the ABC, how to write a work, how to make a sentence, how to ask a question. You have to start with the basics. And once you know that and you and you don't make any mistake on them, then you can switch to technicals. But I think it's more important, yes.
All right. Innovation potential. Bitcoin is often at the forefront of technological innovation, with developments in related areas such as the Lightning Network, which aims to improve scalability and transaction speed.
Okay, I think it's self-evident, so I don't have much to add to that other than it's a really great thing. Unfortunately, it isn't used widely in every country, so you still cannot just pull out your phone and make a Lightning transaction to pay whatever you want. But there's a chance that one day people will offer it when there's enough demand for it. We are still, if there are only 10% of people on the blockchain right now, that's still a minority. There's still a very small group of people. So then, of course, not everybody's interested in doing so. But I think in the future, once it gets more interested, once you get through a certain cap, like maybe 40% or 50%, then it will be self-evident. And if you do not offer your products that you can pay your products with Bitcoin, if you do not offer that, then it will hurt your bottom line. So I think people will do it. Unfortunately, governments sometimes make it hard to offer that. So I know of some shops in Switzerland who did in the past offer the possibility to pay with Bitcoin. But then they changed the legislation and made it really hard for them to keep offering that service. And they ceased offering it. But again, the governments change, the leaders change, and then they want to be popular. And the masses ask for it. So they come back on the decision and make it more friendly again. So, yeah.
All right. Non-reliance on third parties. Coin transactions can be executed without intermediaries, reducing counterparty risk and offering more control over one's asset.
Yes. It makes me think about the thing that, I like humanity and I like people. But that's a strange thing to say from somebody like me. But I trust that everybody has reason and will do the best thing for him if he thinks about it. And if he's not destroyed by or anything stupid, drugs or whatever. But if he's capable of thinking of his future, I believe that people will make the best decision. And Bitcoin is beautiful because it puts all the power in you. The self-custody is dangerous because if you mess up, well, then you lose everything, everything you had. So it is dangerous. And for a lot of people, that is very hard, actually it is very hard. And they need somebody who helps them around, who reminds them always to be careful with the seed, how to store it, how to make sure nobody unauthorized doesn't have access to it. There are people who need a lot of help with that because they are used to a central entity like a bank. And if something goes wrong, you just call a number and they fix your issue. But with Bitcoin, you cannot do that. So, but by being like that, it puts responsibility on your shoulders and all the power is in you. It's not in the government. It's not in an institution. All the power is in you. There's one thing that this doesn't talk about, and it is that it is unconfiscatable. So nobody can confiscate your Bitcoin. The only one who can make a transaction is you. Now, if you do something they don't like there was a guy in Germany, he had an illegal streaming service and he put ad on his illegal streaming service and he made a fortune with it. He made like 2 billion with his illegal streaming service and he was smart. So he did put his entire net worth into Bitcoin. Unfortunately, they seized his streaming service, his computers and everything. And they put him in jail. And they told him, well, we know you made a lot of money with it, a huge amount. And if you don't give us all the gains, we consider that they were illegal since you didn't have the right to run that streaming service. So if you don't give us all your assets, it was 2 billion. Okay. You will never get out of jail. And in that case, everybody I know of until now breaks. So he just says, well, what's the point in being rich if I never can spend my money and if I will be for the rest of my life in prison? let's give him that, and then my sentence is not that hard, and I can get out in maybe 5 or 10 years or 15 years, whatever, So make a transaction in favor of the German state and send them 2 billions. But if he would be more stoic and he said, well, I don't care, go screw you, I'm not going to give you everything I worked for, then, well, he does not. And he can always, since Bitcoin is programmability, you can program it, you can program inheritance. So you can donate it to a cause, you can, or send it to a family member or somebody else. Now, if the state knows who got it, that person gets in trouble. But if you just say, if I don't open the app for 6 months or 1 year or 2 years, you choose the time period, then send the asset to the following address, and you can choose whoever you want. And it's easy. So you're in prison, you won't open the app, and your money gets transferred to somebody else. But you really can resist the government with Bitcoin. And they don't like it. But I mean, you must know that the power of the government is nearly no limits. And here's something where they need your cooperation if they want a transaction. And I think it's a great thing that they put power back in the people, instead always giving more power to the government, which is dangerous to do.
Yes. All right. Pseudonymity. While Bitcoin addresses are public, they are not tied to personal identities, offering a level of privacy that traditional financial systems do not provide. However, this is not entirely anonymous, and additional privacy measures can be taken. These qualities, combined with its growing adoption and evolving ecosystem, position as a distinctive asset in the world of finance.
Yeah, great. So I don't have much to add to it because we already talked about it. And also, the only question I have is, what are the most important qualities? And I think it is security, censorship resistance, and that it is unconfiscatable. I think those qualities are of immense value to anybody who is thinking about his financial future. I mean, nothing else offers you that. And if you opt for anything else, well, then you just trust the government, you just trust the bank. But it has been proven again and again, and that you cannot trust the government and that you cannot trust the bank and the banks. Because the thing is, those entities, they work for the state. As soon as the state sees all its assets, well, your assets, they're all gone. As soon as they go bankrupt, well, you lost everything. So I think you should be wise. And if you don't want an 100% exposure to Bitcoin, it's a smart thing to go to the extent that makes sense to you. Everybody might have a different tolerance to risk, but you can always go for 1%, 5%, 10, 50, 30, 40, whatever you feel comfortable with. But to me, everything else is much more risky than Bitcoin. Now, Bitcoin has a lot of volatility, and a bear market is not a pleasant thing. We will talk about this technical analysis. So I'm not saying that it is easy. I mean, when you make money, you deserve it. Yeah, because you took the right decision, you were smart, and you managed to be ahead of the crowd who loses money when they invest. So, and the number is staggering, and 98% of people lose money who invest. So if you manage to do something that has sense, follow a strategy, believe in something, understand it, and executed it, well, then you deserve to be rewarded, in my opinion.
All right, I have one question on this. So let's say I wanted to make a transaction in Bitcoin to you. After that transaction, would you know exactly how much I had on my account, and would I know how much would be on your account that I sent those assets to?
It depends on of the wallet you're using. Sometimes it generates a lot of addresses, and it will be a little hard. But theoretically, yes, it is possible. So in the past, you could check, for example, how much was on an exchange. But you do not have advanced analytics. So you can only check and see that the address has, for example, I don't know, 0.5 Bitcoin. But you do not know if he has 10 more addresses or 100 addresses more than that address. But yes, you are capable, to a certain extent, you are capable of seeing who sent you. But nobody does that. I would never check how much you have, and private people won't do that. The only guy who will do it is the government for legal reasons, to see if you paid your taxes and so on. They might check on it, but they will use much more advanced features. And yeah, always have, if you're scared about that, just take, for example, a hardware wallet where you have your main stack. And when you make a transaction, just send it to a soft wallet and then use the soft wallet to send it to someone else. And on the soft wallet, have only the amount you feel comfortable having. So if the guy checks, well, then he sees only your soft wallet. Yeah, well, he doesn't know to which extent or from where the money comes. It will be very hard for him to see that. So if you feel any hesitation because of that, I would recommend having 2 wallets.
Could you see like the last transactions on soft wallet and see that there's one main wallet that making the transactions to it, and then look at that wallet also, and then
Theoretically, yes. But the thing is, in practice, when you make a transaction, actually your wallet manages all your assets. It's like if you get coins, and sometimes you get 5 cents and you get 20 bill, 100 bills, and he somehow manages. And it doesn't really appear as one transaction. When you make one transaction, it can, if I'm not mistaken, it can appear as 5 or 10 transactions. So the guy, it will be very hard for him to see clearly. Unless he has access to advanced analytics, it will be very hard. For that, you need artificial intelligence and so on. You need advanced tools to really figure that out. If not, it will be a mess that you don't understand.
Okay, but I do see that as a potential problem, right? That if, let's say you order food from someone and you want to pay them with Bitcoin, then if it would be possible for them, if they have the technology, to know exactly how much Bitcoin to.
Yeah. That really happens. The scenario is very unlikely because they don't have access to that advanced technology. So it's very unlikely.
Okay.
And I'm sure that in the future we'll have more. I think there's a good chance we'll go to total anonymity, or at least that you can choose, for example, one wallet where you press a button, and in that button, once you press that, it is totally anonymous. Everything you have on that wallet. And that will give you peace of mind for something like you talked about. But I'm like, when you ordered food, you will use the Lightning Network. And that already looks very different. And I'm not sure you can do it with the Lightning Network. I think you can only do it because that's the second layer network. And I think there it is already anonymous. So I think it's only pseudo-anonymity on the main blockchain. So with the Lightning Network, that issue probably doesn't exist anymore. I'm not an expert on that, but I think it doesn't exist. So yeah, if you really need help with that, I would recommend posting on a forum and explaining your issues and your worries and the solution to it. People will explain to you how to do it. And probably the answer would be just use the Lightning Network, then you don't have that issue. But people will tell you how you can avoid that risk.
Okay, thank you.
Okay, thanks a lot for that. I found it interesting going through it with you and talking a little about fundamentals.
Yes, me too. Thank you.
And now I would like to stop sharing that and switch to my charts so we can talk about some technicals. It already took a long time. I hoped actually we could go through faster than that. So maybe let's try to not look at too many charts because I could go for a long time, but let's see some interesting charts and explain some interesting concepts. I wanted to do technicals and I wanted also to talk about cycles. And I have to talk, when I talk about technicals, I have to talk about structure. So I want to make technicals, and the subsection in technicals is structure, and the last part would be cycles. The thing is, it is still debated nowadays if the markets are structured or if they are total random. Because in academia, there are still people who write books and still think that the markets are totally random, that there's no structure to it. I do not agree with that. I think there is structure in markets, but it's hard to see that structure. It's not like a 100% relationship. It's a probability. So a lot of times you might be wrong on the timing or on the moment, on the structure you think you see. But according to me, there's structure. So let's maybe start with structure. Okay. This is what Ralph Nathan Elliott discovered at the beginning of the Second World War. So he studied the market a lot. And he saw that there's structure. That's not totally random, but there's structure in it. So he saw that there's an impulsive wave followed by a corrective wave in the market. And the impulsive wave, he did see in them 5 waves, 1, 2, 3, 4, 5. And for a corrective wave, he saw an ABC. So this is bull market, and the corrective wave, the ABC, is a bear market. And if you look into this wave 1, very small, you would also see 5 waves. And every correction you will see an ABC. Okay. Now, of course, this is the most simplified version of it. An ABC doesn't always behave exactly like this. For example, for sometimes the wave A, the wave B goes to new all-time highs, and then the wave C still reaches this level here. So it's not always exactly like this. There are little variances, and you can study this your whole life. But why do you think this is a tool that is very helpful to me as a trader?
Because it could help you know what stage we're in, right? What point of the way we're in, and then in a way predict the future, whether we're nearing the peak or we're going through or we're at the start of a new peak, or we're start of going down, or things like that.
Correct. Yeah, that's a good answer. Now, if you have to take a position where would you want to enter the market? What do you think is a good moment to enter the market?
Well, I think on this graph, the best one is to enter on close to number 2 or somewhere there quite early, right? Number 1, number 2.
Yeah. So would you enter at number 1, wave 5 here, the top of wave 5, or would you number 2, wave C?
I would enter C for number 2, but even the 5 for 1 is better than the 5 for 3, for example.
Yeah, exactly. So what you're saying is you should be Yeah, that's a good answer. I like that. So if you enter C, how would you make it in detail? I mean, where would you put your stop loss? You look at it and you see 1, 2, 3, 4, 5 for the first wave. Then you see that there's a retracement, an ABC, and you think now we have touched wave C. So where would you put your stop loss in that case?
The small number 2 on the left, the first number 2, somewhere like there.
Yeah. Okay. Well, that's not bad as an answer. I like it because you use structure. I asked the same question your friend, and Mikkel said he would choose a number like 5, 10, or 8%. He would try to backtest and see what the best number is for his stop loss. But I like your answer a little more because you use a point in the market. So you use structure. And I think it's better to use structure as a point than to use a made up number, because every number you make up is in the best case just an average. So it might work a certain amount of time, but you're not really looking at structure. And I think if you believe that the market are structures, well, then I think you should exploit that belief and you should use it to your advantage. So what I do and what most eliticians would do is you wait for wave C. So you wait for an ABC. And since it's wave C, there should be a reaction because we are starting a wave 1. There should be 1, 2, 3, 4, 5 wave in this wave 1. So once you have enough here, I would put my stop loss below the wave C. Because if I'm correct, then that stop loss never gets taken out. Because never you go below that wave C. Okay. And if I'm wrong, if for some reason wave C is not finished, or maybe this wasn't actually impulsive, I thought it was 1, 2, 3, 4, 5, but it is just an ABC. Well, in the case the wave C gets taken out, then anyways, I don't want to be in the market anymore because my analysis is wrong. So why should I stay around? So I wouldn't use this. I would use the wave C as a point instead of the wave 2 that you did choose. I would choose the wave C. And I just have some indicators who will tell me when there's enough confirmation. And once there's enough confirmation, I just put my stop loss there. And then depending on what I do, but sometimes I wait for the top of wave 5. Sometimes maybe I'll exit on the top of wave here 5, but it really depends. Sometimes for now, for example, where I think that we are close to this wave 5, I wouldn't wait for a lot, because here, once you're close to this, well, it's not, I wouldn't start a swing trade that takes 6 months or 1 year, because my analysis wouldn't allow it. But this is those trades are those are the trades that make you the most. If you can catch this wave 2 down here, and you can ride it until you think that we have topped, it will be a very profitable position, especially if you use leverage. So a small amount with leverage, a huge amount. Just one winner like that will pay for a lot of losers. So that's the important thing. But of course, you cannot do it always. You can only do it from time to time. And if you trade, you can also make money on when it goes down. So for example, if you do that logic, and instead of buying, you are selling, okay? You leverage. Then if price goes down, you make money, just as you make money if you buy when price goes up. Where would you try, and you think that wave 5 has stopped? Where would you try to put a short position? Where would you enter a short position if you want on the ABC down? Where would you try to enter a short position? So it's the same thing, just in reverse.
Yeah, well, I think as early as possible then.
And that would be where?
So first, can you just clear for me what do you mean by short position? That it's gonna go down, right?
Yeah, it's just, when you buy first and then you sell second.
Yeah.
Okay? If the difference...
Near the 5, yeah. Near the
and
5.
if the difference is in your favor, then you make money. If the difference is against you, well, then you lose money. But when you take a short position, you sell at the beginning, and afterwards you buy. So you sell wherever you want, for example, at this level, because you said this level. And if you buy back here, well, the difference is in your favor. Okay?
So as high I sell, bigger the difference will be, right? So
yeah, exactly. But where would you
enter again?
Where would you enter? At wave 5? Yeah.
That's where I would enter the short, ideally.
Okay, and then you have to answer the same question. Where would you put your stop loss?
That's a good question. Stop loss, so when I stop selling, or what do you mean by that?
Stop loss is just, if the market goes against you, you don't want your entire position you don't want to be liquidated, lose everything. You just want to lose a small amount, 1%, 5%, whatever fits your trading style. For example, my stop loss are very close to the market, because I don't like to hold losing positions. Other people will have wider stop losses. But so the thing with wave 5, until now we use structure. But if you want to sell at wave 5, there is no structure above wave 5, since that was the top. So how do you manage it in that case?
Yeah, then I guess I would put the stop loss on that 5 there at the top. So if it goes higher than that, then I would stop selling.
Yeah, okay. I like that. So to make it more clear, I think that's what you mean. You wait for some confirmation, and then you put your stop loss just above the top. Is that correct?
I think something like that could make sense, yes.
Yeah, I like that. That's great for an answer. So now let's talk about why that happens. And it happens because psychology of humans is always the same. It's like if you look at a fish, they always swim in the same way, or some sheeps. They all run in one direction, and then suddenly they change direction. And it's the same with people. They also behave in the same way since ancestral times. And with greed and fear, well, they show the same behavior when they are exposed to greed. And it always starts like here, you can see, with optimism. Then after optimism, there comes some excitement, because you are a little higher. So people get excited. Then you get even higher. They get thrilled. Then you get euphoria. But then you start dropping. And like right now. And people start showing anxiety. Then they show denial. They don't believe in it again. Then real fear. Then depression, panic. And then you get capitulation. And here it says, normally some people say that capitulation is the top. For example, I would say that capitulation is the top. But this one says that there's something beyond the capitulation, which is despondency. To me, it makes not really much sense to put despondency into it. I think once you have capitulation, everybody's sold. And since there are no more sellers left, the price goes up. But it doesn't matter. They just put one word more. And then you start with depression, hope, relief, and optimism. And the cycle goes through it again. But people always act the same way. when they're exposed to fear and greed. And that is what creates a structure. You know, the main difference between trading and poker is that the smoke of war is thicker. So not everybody agrees with it. Not everybody uses Elliott wave. And you don't even have to. I mean, if you look enough at charts and you use just some indicators, and you will see what happens next, even if you don't call it a wave C. So not everybody agrees on everything I said, you know? So there's much more, the smoke of war is thicker, because in poker, everybody agrees on poker theory. Nobody says that GTA or something like this is totally wrong. Everybody agrees on it because everybody understands it. It is self-evident. But in the market, there's a lot of doubt, and people look at it differently. And I can teach you what I find interesting. But if you become a trader, then a big part of your work is research. So you have to try new tools, new things, always try to improve. And if you come up with something that makes sense, well, if I can incorporate it, I will. You know, I'm not dogmatic, so I will change my opinion. And if you do something better than I do, I'm very happy for you. So I'm just saying that because it's not truth that everybody agrees on the markets. Their opinions are very wide, and people get very upset when you, for example, tell them that you think differently about the market. But that's a very bad way of looking at the market and thinking about the market. You should always accept that you could be wrong. And for example, Elliott wave, well, I've listened to the best statisticians in the world, and as I told you last time, they only right 33% of the time. Now, that doesn't mean that it is not useful what they do, or that you should not understand what they do. I think you should study Elliott wave and know the principles, the rules, and so on. But you must understand that it's not because you put a label on a chart that it will be 100% correct. You know, sometimes the market surprises you, and what you think 1, 2, 3, an impulse wave actually was just an ABC. So that happens again and again.
Yes. Takes a lot of time and practice, right?
Yeah, exactly. That's correct.
Would you say trading or investing in general or how markets work is even more psychological than how poker strategy goes?
I would say the more money you trade, the harder it can get for you. Because, for example, we talked about the guy, I said his name, with his hedge fund, Willy Woo, and he ran it into zero. He lost everything with his hedge fund. Well, you should not be too hard with him. It is very, very hard to take decisions when there are millions on the table. And there are days you can make 60 millions, and there are days you lose 20 millions, you know? If it's very difficult to stay rational and keep doing what you should do. Sometimes you just believe too much in your analysis and you start taking too much risk, or you freeze and you don't exit when you should exit. I cannot explain it exactly, you know. There are a lot of reasons, but the amounts you can have under your control can just be immense, and it's very hard to stay totally objective with.
Yeah. I think my question was a bit different, right? That in some ways, sometimes it doesn't matter what the other player thinks, right? If you have aces, whatever they think, you know you have the best hand there. Or if you have a flush draw, you can do the math and see how big they bet, and just like the cards will run out in a predictable way over the long run, that if you're on the flop by the river, you will make a flush 36%, right? So there's something very concrete about it. Whereas with markets, it seems way more dependent on, like, if poker would be when it would matter what your opponent is thinking or deciding, right? Because in market, it all relies on how the people think, right? Because how people react, how they, like that emotion curve you showed, that determines how the market will move. But in poker, sometimes the other player can feel anger or happiness. It doesn't really matter. Your flush draw is still worth 36%, right? Do you know what I mean by that?
Yeah. But I also mean I also think that in the markets, there are things that are in your favor and will work like 36% of the time or even more than that, you know? So I also think that happens. And I think we can illustrate it with some charts. What I can start with is, for example, show you one indicator who gives you a warning when we are close to a top. You don't have to rely 100% on elite wave, because I use elite waves for trading purposes. For example, for finding a wave C and then taking a long position. But I do not trust it 100% because it's a lot wrong when it comes to calling a top. So it tells you it is a top, and actually it wasn't. And we go higher and we go higher and we go higher. And you can do that for a long time. So I like also using a lot of indicators. So the first indicator, you have it on screen right now. And it's a new indicator I found recently. So I had to search for a very, very long time until I found this indicator. And I'm quite happy with it. So when you see that, you should be worried. And if you go back, so you backtest, you always backtest, and you always see how something behaved in the past and what happened in the past. Because often it repeats, more or less. So the last time we got it was here. One wave more up, but it was still very close to the top. So we didn't go very high. So now we could be in the same situation. We just had this, we get one more wave up, and then we start a bear market. That would make a lot of sense, especially if you look at cycles. Okay, I have to reload my chart, show you the rest, because I have to refresh it if you want to see. But it gave a very good exit point every time until now. So this one we just looked at, and before that, here we even did get 3. Top was already in. This time we didn't make a new all-time high. We went straight down. That was 2018. And here also it was a great moment to think of taking some profits, because we entered a bear market and went much lower. So as you see, it's not totally random. This indicator doesn't give you a signal anywhere and everywhere. Now, is it because we have it, we can trust it in 100% and be sure that we entered a bear market? Of course not. If I look at the same indicator on the S&P, it will show and the market keep going up for maybe 2, 3 or 6 months before you start a bear market. So it's not always as clear as it was on Bitcoin until now, but it helps a lot, you know. Also, the second indicator I want to show is that moving average. You know, when you see that, you should be worried about a top, okay? But when you are below that moving average, well, that was in the past always a good moment to buy. Okay, here it would have been perfect to buy on that candle, because afterwards a huge bull market started, as you can see. And here again, you get the warning signs, and then you enter a bear market. And again, when you are below it, your chances of thinking about a long position, here you should really hard think about a long position. You should check a lot of things. And if you feel comfortable, well, it's a good idea to enter. Now here we retested it. So this was, here you can see 5 waves, 1, 2, 3, 4, 5. But then you have an A, B, C, and you start wave 3. Okay, so here the ABC did retrace a lot. It doesn't retrace always that much. But again, if you didn't buy here, you end up again below that moving average, and it's again a very good moment to take a long position. Here you get
what's that moving average?
I have to check that. I'll tell you which one it is. An indicator who uses that moving average, and I have to check how it is configured to tell you that. Okay, but I'll send it to you if I remember and if I can find that answer. And here you are again below. So this time when we went below, we stayed a long moment below that moving average. So I'm not saying that it is the best moment to buy. I wouldn't rely entirely on this one. Okay, but for sure you should be scared about the future of the bull market once that warning signal appears. But before that, you can be safe. Here people were very scared that it was already over, and it was not. And you could be quite confident that it wasn't over because you didn't get that signal. Okay, so you can just wait until you get it, and then think about when you want to exit and what you want to do.
All right, looks like a good time to take a short position?
To think is like a good time to start thinking about a short position. Yeah. And now let's do the opposite. Let's think about when's a good time to enter a long position. Because I have actually much more. It's harder to say when the top is than the bottom is actually a little easier with the indicators. So here, just look at that indicator. When you get the red points, it's a good moment to think about a long position. Okay. And you can combine it, for example, with this indicator, which gives you extremes, some capitulation. So it gave you a capitulation here, and then it gives you one more here. So this time we get two. Normally we only get one. And also, as long as the dots are red, you should not think about. You can be hesitant, but once they turn green, well, you can have more confidence, especially when they turn green. And also the first dots you have is the purple dots, but then they disappear. And then secondly, the red disappear. But when you have, at least when you have the red dots, it's a probability of entering. It's a good moment of thinking of entering the market. Doesn't mean that it's always direct and that you always should enter immediately and take a leverage position. But it's a good moment to think. Here also, it was the bottom. And this time capitulation was very close. It was more clean, more easy to enter. And before that, it's the same. Here also, you see, it gave you the entire period where it was very nice to enter. So you had a long period to think about taking a long position.
Very good indicator, yes.
Yeah. So that's just one. And I'll show you three more that do the same job. So here, the best moment to enter is when you have the red. And that was the button. Okay. Now, you might not always get a red because before that, I think we only get orange. But there are at least three indicators that I can show you that do the same job. And in general, it works quite nicely. So of course, trading is more hard than just looking at one indicator. I mean, I can give you the name of the indicator. You can take a free account on TradingView. You won't be able to put 5 indicators on the chart, but you can put 2 indicators on the chart and you just look. And when you see red, you enter. Okay, that analysis, if you just do that, you will be way ahead of a lot of people. Now, sometimes the red will take more time than here and you still go lower, but it's still much better. I mean, if you look at how much we lose from the top to the bottom, for example, which is a huge amount, it's like 87%. Let me give you a precise number. It was 77%, not 80, it's just 77, but that's still a lot. And look, sometimes the bear market are longer. We saw it a couple of times in 2000 on the S&P, and before that, I think the Second World War, maybe 2008. I don't remember exactly, but a couple of times, if we check, the bear markets were longer. But even if it's longer, even if you don't take a stop loss, you already have a discount of 77% once you get the red, and it's just more interesting to enter a position here than to enter where everybody wants to enter the position when you are at the top. It's just more interesting. So I would, for example, here, I would wait for if I use only those indicators, I use more than them, but I would wait for the B for bull, and then I would put my stop loss below the low, So I only risk a small amount if I'm wrong. But even if you don't do that and you just say, I can't manage a stop loss and it's too risky and I won't be looking always at the charts. I mean, if you wait for the market to be oversold, well, that's a smart thing to do because it can only go down up to a certain extent. Bitcoin will never go to zero, And if it's already heavily oversold, well, that's good news for you if you want to enter the market. See, it was only orange, but it was orange here. So it helped you twice. This one you should have in this one, middle.
So either orange or red, sometimes orange also.
Yeah, here again you had all that long period of orange. And if you want to be sure that the orange period is over, just wait for it to switch to blue. Once it switches to blue, well, you can have some assurance that then it's over. And you should not rely only on one. So you also have the count. And the 88 wave count is an A, B, C. And here somehow there are 5 waves. 1, 2, 3, 4, 5 in the C wave. You see? And in the A wave, you can count on A, B, C. So a lot of things will help you as a trader to pick the bottom. But having, for example, red and a clear 8-wave count, well, it is like having a flush in poker in your hands. And it's a very interesting moment to think about getting some exposure to the markets. Okay, I can show you 2 more if you want, or we can stop with finding bottoms. Would you like to look at 2 more indicators who show you the bottom, or do you want to should we talk about something else? Because there are more stuff I can talk about. But it's just to show you that sometimes you get great hands, and it's a great moment to look for some exposure to the markets. Yeah, I want to show you all those indicators will tell you more or less the same. So now I can go in more detail about what will happen now. And I also wanted to talk about cycles. So I don't think you need to see 2 more indicators to find the bottom. But I would, of course, check all of them and see what all of them tell me. If they all give me the same message, I would check everything. But we don't have to do that right now. But I think if we can talk a little about cycles, that would be interesting, because it's not just that you have a bull market or a bear market. I also think there are cycles. So there's a time for a bull market and a time for a bear market. And it's not totally random. And to show you that, I'll present to you my cycle analysis, which worked perfectly until now, but maybe in this cycle, it will not be as great. It will not be 100% correct. But in the past, until now, it was. So the difference with this chart is that we are looking at monthly candles. And before that, we did look at weekly candles. So there's a lot of mess in it, but I'll tell you what you have to look at. So the cycle is based on the halving. The Bitcoin halving. Do you know what the Bitcoin halving is?
Yes, I do. It's but I'm not good at explaining it, I guess.
Yeah, so in order to distribute the 21 million Bitcoins, instead of putting everything on the market at once, which would be too much and there wouldn't be enough buyers for it, he slowly generated through mining Bitcoins. And at the beginning, it was 50 Bitcoins. And at the first halving, every 4 years, you divide the amount by 2. So from 50, you went to 25 Bitcoins. And then 4 years later, here's the second halving. From 25, you go to 12.4. And it will be like this until all Bitcoins are mined. There are no more, you don't get any reward for finding a block. You only get reward from transaction fees. Because now the miners have transaction fees and inflation. It's a very small amount of inflation, as you will see, but it's still some inflation that they get and they are paid with. In the future, that will stop and they will only get paid through transaction fees. So the cycle analysis is based on the halving. So what you do, does it answer the question, or do you want to add anything on that before I move on?
I think it prolongs if there wasn't any halving, then probably all would be mined by now, right? So it's interesting that he thought it would be better if there's still going to be new stuff mined in the future as well, right? So there's more work that goes into it, I think.
Yeah, he did it in a very smart manner, because at the beginning he gave more Bitcoins to the miners, but also the price was very low. Now the price is very high, so they get less, but it's worth much more, So it balances out. So he did that in a very, very smart manner. He's one of the greatest genius we had. And what he did for humanity is immense. It's the most beautiful gift that somebody has given to humanity, because it makes you sovereign. You can take control over your finance, and you never could do that in the past, and it gives all the power back to you. So he did something very beautiful, and which will do a lot of good on the free market. As long as we use money as a means of exchange, as long as we don't go to a resource-based economy, well, it is really important what money we use and what are the rules we work under.
Yes, I'm listening. Go on.
I'm still talking. Did you not hear what I say?
Yes, I can hear you now. Sorry.
I think something I said didn't come over, but it's not that important. I just said it's something beautiful. And as long as we use money for exchange, it's really important under what rules we operate. Are you there?
Yes. What can you say again? What's the beautiful part?
Yeah, I don't know if you hear me correctly, because you seem to be missing stuff out, what I say. The beautiful part is that he did it very smartly, He balanced stuff out. At the beginning, Bitcoin was worth less, so he gave more Bitcoins. And when Bitcoin price was higher, then it was not necessary to give that much Bitcoins to the miners, since they get less, but the price is higher.
Yes, that's great that he thought about it even so early on, right?
Yeah, he was a genius, and the gift he gave to humanity is very preciable. It has a lot of value. He's probably one of the guys who did the most for humanity, because it is when we use a system for exchange, it is important that that system doesn't screw you over. And with Bitcoin, that's the case. I mean, it is a fair system. It's like a fair poker game where nobody is cheating.
All right.
Okay, now I want to, but it has an impact on the psychology, and that's why it creates cycles until now. Because when you go from 50 Bitcoins to suddenly 25, well, the revenue drops a lot and miners make less money. Okay. But it helps us to, this shock on the supply helps us to calculate the top. So what we do is we take the button, okay, and we watch how many days it is. And here it is 13 candles, so 13 weeks. Okay. So you do the same thing from the button, from the halving to the top. And this time it was 12 candles, but it was around the same time, 13 to 12. So very close. And then you get a bear market. You take note of what was the lowest price, and you go to the halving and you see how long it took. And this time it took 80 candles. So 18 weeks. No, I'm sorry. It's not weeks. It's month. We're looking at a monthly chart. So 18 months to go to the halving. So you go from the halving to the top, and it should be around 18. And it was 17. So every time it's a little longer until the halving and a little shorter until the top, 17 months. But it gives you a very good idea when the top should come. And you do it once more. You see from the next cycle where the bottom is. And then you go until the halving. This time it was 17 and now it was 18. And then you do the same. You take the halving until the top. And it was 18. So this time it was a little longer. But it's very close. It's nearly equal amount of time. We also have to take the bottom till the halving and then take from the halving until the top. And the top, according to the cycle analysis, should be this November. I made it 18. So 18 months later should be the top. So the thing is, we are too early right now to enter a bear market. So why I am not so eager to take a short position right now is because I think it's a little early. And I would be surprised if we enter a full bear market right now and we go down immediately. Does that make any sense? Do you have any more questions about the cycle?
No, it does, right? It's interesting. So it looks like what was those first waves, Elliott waves, right? Looks like there's one more upward wave that's projected until November, right?
Yeah, but I don't expect you to do much, Also, if you look, there's a stock to flow model from Plan B on this chart. There are two actually. It gives you stock to flow is just if you look at how rare it is and how high it should be valued because of its scarcity. And in the past, stock to flow always worked. So here, for example, this line is stock to flow and we were above it. And the other line is also a stock to flow and we were above the red. Okay. Now, if you look at the next cycle, we again did. So every time there's a halving, it jumps higher, because it did get more scarce, so the price of Bitcoin should be higher. And it adapts. Because Bitcoin gets scarier, the price rises. And we were again above, and we were again in the red. Okay? So stock to flow worked very nice until now. But this cycle, I think it's over. Plan B's stock to flow won't keep up. So in the last cycle, we also, the amount, and we also were in the red. Okay, so this cycle we just tried to enter the red, but we did get rejected. For a lot of people, that's a little frustrating because they expected that we would at least go to 200K. According to this, we should at least be at 200K at the end in November. But I think it will be quite hard to do that actually, because the indicators, the first one I showed you, that already says we have a top. And yeah, I would be very surprised if we manage to go higher. And there are reasons for that. And there are more indicators I have to show you. It's because we also lost momentum. There's one indicator who shows us that we lost momentum. And when we lose momentum, it takes like 4 months until we manage to get back some momentum. So now, if we use 4 months until we manage to get back some momentum, there's not much time left for the bull cycle. So I would be surprised if we reach the 200 case. I would be very surprised. But according to stock to flow, yeah, we should go much higher. This shouldn't be the end of the bull market. But I think we should be very skeptical about that. Here's the last halving. It was 6.25 and now we are at 3.13 Bitcoins. How are you doing, Norman?
Doing good. How are you?
Yeah, I'm just wanting to know if everything is fine and on what we will conclude, because I think we're coming to an end. Yeah. There are warnings, you know. I wasn't surprised that we couldn't go higher here because I had a lot of warnings in the charts. And I can show you that if I find the correct chart. So there are a lot of indicators you can use and a lot of help. The thing is just you have to study the charts enough and you have to know what indicator to use for what. Yeah, for example, this indicator is helpful because when you get a triangle, normally you get a wave up. So right now we are in a wave up, you see, and also we switch to green. But that's not the one I want to show you. Here, this one helped me a lot because every time you get the crosses, you should be worried because normally when you take a cross, it's either the top or it takes a long time until we manage to get higher. Here we did get the cross and we still went higher, but we have a cross again. And, you know, it's a hard thing to do just to get over that cross. Now we're looking at a 2-week chart. Okay, that should do. Now let me reload it. It's just to tell you there are a lot of tools and there's a lot of help available. The thing is just you have to study it enough and you have to think about what the charts are telling you and how is the best way to trade accordingly. So I just want to show you that every time you get a cross, you did get the crush and then we had the wave 2 down. We talked about already in ABC, which retested the lows, you know, and it's just that one cross who made it. And before that, this cross did give you the top of that bull market. Yeah, that was the first one. And this one warned you about wave 2. All those crosses here were a death sentence for the bear market. It was the stop of the bear market. And this one was a warning that we will have some difficulties, but we managed to go higher. It's the first time we get those crashes and we managed to go higher at the end of a cycle. Because before that, we only did get crushes here and it was only wave 2, but we only did get one also. But you see, so once you have those crosses and we had them here and we have them here again, it will be very, very, very hard for Bitcoin to go to new all-time highs and to go to the 200Ks it's supposed to do in this cycle. It just will be very, very difficult to manage to do that. And here's the momentum indicator that I wanted to show you. So every time the momentum crashes, so you get momentum, it gets yellow, blue, green. But when the momentum, are you back?
Yeah, sorry, the momentum, you mean the trade volume or what? How is momentum calculated here?
Well, the underlying, I think it's a MACD indicator, but I call it the momentum indicator. It's just, if you want this also, you could call it momentum. So at the beginning, you start slow and then it picks up and you get higher. But at one moment, the momentum just crashes. So instead of going higher, you just go to 0. And then you go either negative or you stay at 0 a long time. And then you pick up some momentum again. That's what I mean with momentum. And yeah, when it crashes, the thing is when it crashes, it takes a long time. I have to check, but this was like, let me see. And the thing is the momentum crashed last time where we were during that period of stagnation and it crashed again now. And it will take us a long time to pick up some more momentum. And when we will, I'm scared that there's a good chance that the momentum won't be to the upside, but to the downside. That will get some momentum. So the momentum will pick up, but it will pick up in the other direction. So I wanted to tell you how long it took. And every time it happened, it just, when the engine is not working anymore, it takes a long time. So here we can say we have momentum once we go to new highs. And it took 18 bars. So 18 weeks to go higher. It's a long time, you know. Here also, if we check, it's around 18 or 20 week until we get back some momentum and we go higher. And here, for example, you see what happens in a bear market. So first you lose the momentum and then a new momentum picks up, but it's in the other direction. So here it did pick up, but it was for a bear market. And this one was very short lived, but it also was, even if we pick up momentum immediately, it is not a good sign because normally it takes a long time to be healthy. Here also it took a long time. So it's just to tell you that with the two last indicators I showed you, I was prepared for us not going high immediately. So there are warning signals you can pick up on. For example, when you use the momentum, well, you have to backtest a lot and think a lot about what just happened and what are the consequences. And and when you use that, normally you don't go immediately to new all-time highs. Yeah. I think this is quite good. This helps you a lot. Now, all the charts I showed you are for a higher time frame because I think it's more interesting that we look at the bigger picture. But I also have indicators that I use for a smaller time frame because mostly I trade the 1 hour chart and 4 hour chart. Do you want to look at any more chart or can I stop screen sharing?
Yeah, I think it's good for now. Yeah.
Okay, great. You were very patient and it was very interesting doing this with you. I hope that gives you an idea and it helps you a little with how you look at the market and how you analyze the markets. And I think it's good that we did that and that gave you some new ideas and some very new things of thinking about the markets. And yeah, I found that great. I enjoyed talking about it with you.
Yeah. So now you know me how I am as a student as well, right? Not only as a teacher.
Yeah, we can say that. I don't see you as a student. I see you as somebody who is interested in something and wants to learn a new skill. It's like if I'm a fisherman and I fish big fish and you're just interested in how I do it. And because I'm going on a ship and fishing, I'll show you one day, you know, but that doesn't mean you're my student. But yeah, it's interesting to do this with you and you can think calmly about it. And on occasion, you can come back to it. And if you want to take a look in the future again at the chart, just let me know and we'll find a moment again.
Yeah. So how much do you charge for things like that? And how can I repay you for it?
I'm doing it on a friendship basis. Now, if you want to get very serious about trading and you would like to have me as a financial advisor, then it's good if we find an arrangement. Because the thing is, you will make money with it if you follow my advice, if you can understand it and if you can follow a strategy, you will make money with it. So if you make 10K, 20K, 50K, 100, 200Ks, you know, it's normal that I get also for the work and my analysis something back. But for my clients, I always find an arrangement. So we talk about it and we see what they find acceptable and we just find an arrangement. And normally there's a basic fee that I pay every year. And on top of that, they give me a small commission. But all the details I'll negotiate with my client. It also depends on how much he wants to do. Does he only want to swing trade? Does he want to do more trading? Does he only want me to help him with a strategy like DCA? I can send you an interesting document on DCA that you can study. And that you see that timing the market is not everything. If you get the fundamentals right, then timing the market is not everything. So I will send you that document about DCA. But you know, that's dollar cost averaging.
Can you say it again?
Dollar cost averaging.
Right.
It's a strategy where you get exposure to the market on a regular basis. The document I show you will show you a perfect trader who always ended at the best moment, the worst trader who always enters at the worst moment, and somebody who is neither. Because you can never be the best. And it's very hard to also to be the worst. And the guy who only has a plan, he invests just the same amount every month. And you'll see that, of course, the one who is perfect does better than the rest, but not that much. And the guy who uses his DCA, dollar cost averaging, gets very close to it. And even the guy who enters at the worst moment still makes a nice profit. So I'll show you that and you can think about that. But you see it, the document is updated so you have the real results by using that strategy. So you can think about that. Okay, Norman, I really have to take a break because I have to go to the toilet, but I'll see you next week. Think about everything, and if I can be of some more help to you, or if you want ever to look again at the charts, just let me know.
Yes, I will think about it. So thank you again, and see you on Tuesday, right?
Yeah, and it was great talking with you about that. And if I can say that, I know you're not my student, but it's great to have you as somebody. I'm sure that you have some affinity for the markets because you know how to live with probabilities, and that helps a lot. Bye-bye. See you next week.